Foremost on people's mind right now is the coronavirus. It's spread beyond Wuhan. From an insurance perspective, from the industry's perspective, how do you view it?
Well, I guess this is a new norm because we'll see more viruses popping up, in particular due to climate change, because viruses do travel and we have to deal with it. And certainly when you look at the response in Wuhan and beyond Wuhan, I think it was very professional. It was detected very early on. It was really condemned early on. And certainly we were involved through AXA partners a lot. And I must say it was a good opportunity also to show to our customers that we are there and that we can help in a unnormal situation. But this will be something you'll see more often.
Do you think the world has learned from the SARS outbreak?
Well, we always learn in these emergency situations, but then forget again when it has gone. I think we need to remind ourselves that the environment is changing, it is getting warmer everywhere, and therefore new viruses will pop up. So going forward, the implication of climate on health is something that we need to study more and need to understand better in terms of its implications.
We're also seeing more natural catastrophes. Australia is a case in point. How is the industry evolving to take that into account?
So it is absolutely true that you see more natural catastrophes, but the pattern of it is not 100% clear yet. So if you go back to last year, you see that there were many more smaller ones. If you go back further, you see that there were very few big ones. So the patterns are not yet clear, but one thing is clear, we have more of them. The insurance industry is obviously looking at this because it is a bigger burden in terms of loss. We try a lot to help companies, to help our customers to do more on prevention and to be better insured. However, if you look at it globally, you see that the majority of these catastrophes are not even insured. $130 billion is the protection gap of people that are suffering of not being insured, and that's the real problem.
I want to take a look at the bushfires in Australia. We had a conversation with the Finance Minister of Australia yesterday, Minister Cameron. He says it's too early to actually estimate a cost. From your perspective, is there a way of looking at how much this will cost Australia? And from an industry perspective?
Again, very difficult to say. When it comes to your own exposure, it's relatively quickly quite clear what your exposure is, more or less. But again, if you look at the total exposure, you will also have the non-insured part, which is the majority, and therefore it's very difficult to estimate. But certainly when you look at the implications on Australia, beyond from the bushfires, but also beyond the consequences onto the economy, it will be tremendous.
Will it be increasingly difficult for individuals and companies to insure themselves going forward, given the patterns that we're seeing now?
So, in insurance, there is a principle. There is never a bad risk. There's only a bad price. So every risk is insurable, but when you look at what is happening around the environment, it will mean that prices are increasing. And the only way we can continue to insure even more people, also to cover the protection gap, we need to work more on prevention. And that is the angle that we are taking. We are helping our customers, companies and individual customers, to be better protected. And that's the only way how we can continue to afford insurance.
We're seeing a low-rate environment, and a lot of people say that it's going to be low for longer. I mean, how are you? It's not great for your business. How are you coping with that? Are you continuing to streamline your businesses to cope with it?
So we've taken a very strategic decision in 2016. We were very exposed because to financial risk because we were traditionally more a life and savings company. We have shifted our portfolio after the financial crisis from 80% life and savings to today 20% life and savings, to go more into so-called technical risks that are not related to financial risk, to be less dependent on the financial markets. And but I look at it more from a perspective, a broader perspective for populations. When you look at this low interest, it is very much a question around how does it mean for the retirement of people. If you wanted to have $1,000 of retirement today, you need double the initial amount that you used to 10 years ago. And so how do we cope with the fact that low interest rates are everywhere and that we have to get used to the fact that we need to work longer and save more efficiently in order to have more when we are older?
Bloomberg ran a story yesterday suggesting that AXA is considering its options in the Middle East. Can you confirm that?
Well, I would never comment on market rumors, that's for sure.
Are you considering, given the cost could be higher, given the issues with Lebanon, what implications could there be on your business?
Again, coming back to what I said earlier, in 2016 we've embarked on a new strategy which was very much going away from financial risks, focusing ourselves on the large countries that we have in order to transform the business, because you can't do it everywhere, and we're continuing that strategy. And when you change a company, many rumors come up, but the key thing is to stay focused.
We'll keep watching. Now, the US-China trade war, tensions, if you must. How do you view it? Are you still concerned about it?
So I think it's a very good news that China and the US have found a first phase of agreement. I think that was very much appreciated by the market. However, when I look at it more longer term, I do see that there are many questions that are not yet dealt with. So the question is, when is the whole question around technology being dealt with? And the other question is, what does it mean for Europe? Because if China and the US have a deal, and they don't have a deal yet with Europe, is Europe the next China?